The second quarter saw a slew of big media deals from Charter and Time Warner Cable to Verizon's acquisition of AOL. And here with more analysis is Bart Spiegel, one of the authors of a new report by PwC on deal activity within the media space. And Bart, it's good to have you here. Welcome.
Thank you, Scott.
So help us understand this a little bit more. What were the biggest deals in media during the second quarter?
Well, as you mentioned, we had Time Warner Cable and Charter. That deal was announced, and that's obviously a transformative deal for that industry and that subsector. And then you have so that's a distribution deal, and then you also have the Verizon deal that you mentioned, which is more on the content side of things. So you've got activity in the distribution space and also in the content space, and we expect that to continue through the rest of 2015. And
there's certainly media is a broad space. I mean, were there any particular areas within media that really caught your attention?
Well, I think to your point before, the distribution deals on the cable side, those are always, at least those typically this year, we've seen a lot of activity in terms of announcements of those transactions. But also when you look at content deals, you look at all these companies out there that are really trying to acquire as much content as possible so that they can monetize it across very different geographies and distribution platforms.
Now, deal activity in the second quarter, at least within the media space, totaled $76 billion compared to $39 billion during first quarter. I mean, what's driving this really impressive growth here?
Well, so from a deal value perspective, which is what you're referring to, you actually see that big pickup primarily driven by that one mega deal that we talk about, the Time Warner Cable Charter deal. But I'll tell you, if we were having this discussion 2 years ago, I feel as though mega deals weren't as common in the sector, and now we're seeing them time and time and time again, these billion-dollar-plus deals that are really transforming the sector. And so it's really exciting because it shows how dynamic an industry it is that we're all a part of.
And of course, the environment for M&A is pretty favorable, not necessarily within media, but overall, we got record low interest rates, right?
That's right. And so you have a lot of players with access to capital that are enjoying the opportunity to go out in the market and really look at what's up for auction, what's being put on the block, and really being competitors to acquire some of these assets.
And your outlook on deal activity within the media space, I know you're expecting a robust third quarter.
Yeah, we're expecting a robust third quarter and fourth quarter. We don't see anything that's really going to change how interested players are in kind of testing the waters and testing the market. When you look at it, I think if someone was to sit on the sidelines for 6 months, a year, 18 months, I think you've got a problem there because all your other market competitors and all the other clients, all the other companies that you're playing against, they're going to be active. And if you sit on the sidelines, there are going to be assets that come up for sale or disruptors in the market that you're not having an opportunity to evaluate and get a piece of. And so I think you're going to see continued activity in the market.
All right, Bart, all issues will be following. Bart Spiegel from PwC, thanks very much for joining us.
Thank you, Scott.
I'm Scott Gamm, and you're watching The Street.